How's it going, everyone? It's Sam. Tesla had a massive day yesterday, and I'm talking about probably the biggest news day that we've seen in a while. The implications are massive, and while I don't usually talk about Tesla too much on the channel, I usually talk about Bitcoin and sometimes crypto as well. I wanted to talk about it today because it is one of my largest positions, so I would feel a little bit weird not talking about all that great news. And I know this is a bit of a longer video, but towards the end, I do talk about why you would want 5 shares right now. And I think if you stay through that far, you'll see all the great news. You'll see the metrics that I'm talking about. You'll see how the company is changing in a massive way over the last even just couple weeks. And you'll understand why I say that in the title. Now, if you want to see future videos like this, hit subscribe underneath the video. Turn on the bell notification right next to it so that way you can see them as soon as they come out. Also, there are a couple links down there. So first of all, if you want to buy Tesla on an app I really like, you can check out M1 Finance. It's a really long-term investors app because you can buy a couple times a day. They have great perks. If you upgrade a little bit, you can also get a 5% savings account in there too, which is where I keep a lot of my cash. So check that out underneath the video. If you sign up and deposit, we both get some money. I forgot exactly how much you need to deposit, but definitely check that out. There's also a link down there to Tesla in case you want to use my referral code. I've never had someone actually accept that referral code, but it both gives us some free stuff like 6 months of free supercharging and 3 months of full self-driving. So in case you like these videos and you want to give me some full self-driving, if you've already looked at buying a Tesla, now seems like a pretty damn good time to do it. The prices are unbelievably cheap. And last thing I want to say, Treasure, in case you don't have a cold wallet and you own some crypto, I would suggest getting a Treasure wallet to keep your crypto safe. A lot of people don't understand how unsafe it is in exchanges. Now, they have a big Black Friday week sale starting next week. If you want to wait, I would probably wait and come back to these videos maybe in 5 or 6 days and buy a wallet then. If not, if you don't want to wait that long, there are links to it underneath the video. I have the best sale out there because I give 15% off. I make 0 on the affiliate commission. So you can check out the link underneath the video. I just want people to get wallets as cheaply as possible so that way they actually get the wallets. Now, we just had CPI come in. This affects Tesla a little bit, so I want to hit on it. CPI just came in lower than expected. It came in at 3.2% versus the forecasted 3.3%. And as you can see, this is just big because it shows that we actually had a little bit of a pump and now we're starting to dip back down. If we have another good month, especially if we break this old level, if we break under 3 next month, I'm not sure what the expectation is, but if we break under 3, that's going to be really bullish. Everyone's going to say, okay, this was just a scare and now we actually keep going down. Rates can be lowered. Now, the reason that's so big, obviously, is that Tesla has had a hard time selling cars along with all the car manufacturers because it's hard to sell cars when they're 50% more expensive because of interest rates being at 6 or 7% instead of 0 or 1 or 2%. So it's been difficult for a lot of car makers, but Tesla is still crushing it. I mean, yesterday we had a 4.2% day and it was up 2% in pre-market. Now it's up 4% in pre-market. Again, this is my largest position. I actually added to it last week a bit, and I'm glad I did. Obviously, the price is up, but some of the news that continues to come out for Tesla is so extremely bullish. Let's go through some of it right now. And I do think it's going to be really rare to be able to get your hands on like a full share of Tesla as a new investor years down the line. Right now, it's like $200. If you really want to buy a share and you just get into investing, you have, let's say, $500 from working over the summer as a teenager, you can buy a share of Tesla. But with the way that their business is growing and so many different options that they have, I mean, think about this. They have the energy business. They have their car business, which is obviously the largest right now. Robotics, FSD, charger deployment, charger like charging over time, and they can literally become a utility company because of the wall chargers as well. They can literally become a utility company, not because of the wall chargers, the wall power packs. They can literally charge the grid if you agree to be part of their program. They can charge the different electric companies or whoever it gets to take some of the electricity out, and they can arbitrage that as well, which is going to be a big thing moving forward. So they have like 6 or 7 different businesses in Tesla that are multi-billion-dollar companies that are doing hundreds of millions or billions of dollars a year in revenue right now. And it's kind of nuts. They also have their insurance business, but let's move on from that for a second because they had some big news. UK petrol station group, EG, to buy Tesla ultra fast chargers. And this is actually massive. And people don't realize it because of the numbers, like how they frame it. Petrol station operator EG Group said on Monday it would buy Tesla ultra fast charging units to boost its electric vehicle charging network across Europe as the EV maker continues to expand the reach of its charging business. EG, owned by the billionaire Issa brothers, who also own UK supermarket chain Asda, will expand its charging network to more than 20,000 EV chargers at its own sites over time, from above 600 currently deployed. So they say the first ones will be installed at the end of this year. And the open network Tesla chargers will be accessible to all EV drivers regardless of the brand. Now, why are they doing this? I think it makes a lot of sense. They're a gas station company, right? They need to transition to EVs. They see kind of some of the writing on the wall maybe, and they still want people to come into their shops or wherever they're at to buy snacks and food and stuff. That's where the real margin's made. So it doesn't really matter if they have gas too much or if they have EV. It's also a lot easier, I think, to just have EV. You don't have to have trucks all the time coming in and refilling and stuff like that. So they don't really care as long as people continue coming to their company, and they need to start that transition. Now, this is coming after BP ordered $100 million worth of the ultra fast chargers. And they said that they were going to do $1 billion over time, like over the next 7 years. This is also $1 billion. So a lot of people don't realize what this exactly means because they're doing like both sides of the equation. The first company ordered 100 million, but they didn't say how many chargers they were getting. This company ordered, or they're going to have 20,000 EV chargers, but they don't say how much that's going to cost. Now, it's hard to find exactly what a Tesla charger would cost, but we know based on some different programs over time that some Tesla chargers that people were trying to get for their businesses charged, they were going to cost about $43,000 per charger, something like that. So if Tesla chargers cost, let's say, $40,000 for this giant oil company or this giant gas company, 20,000 of those would be $800 million. Now, we don't know how long it's going to take for Tesla to start selling those, or how long it's going to take from start to finish. We don't know if that's like a 20-year plan or a 4 or 5 year plan. But we do know Tesla is much more efficient than a lot of other car companies. It says so right here. A lot of the competition was charging like over 6 figures for the same car or the same charger as Tesla. And Tesla can do it for 40 grand. So they're probably going to go with a lot of Tesla chargers, especially because everyone's adopting their network and they're just the most reliable. Tesla will still probably do maintenance on them and all that good stuff. So it's changed recently where Tesla had to spend hundreds of millions of dollars, probably a year, to build out this network, to double it in size each year or add 30%. Now people are paying them because they're in such high demand. They want them at their places instead of Tesla just figuring out the best place, mathematically between different major metro areas or in busy areas where they can service a lot of people. Now everyone wants them, no matter, if they're the right person or the right place to put a Tesla charger. So Tesla's going to start making money from this. Now, that's a huge difference from Tesla just putting those out and maybe getting some revenue over time if they upcharge you a little bit on the electricity, to now they don't have to carry all that debt. They don't have to take that away from their free cash flow. Now they're actually going to make money from it. So instead of it being a money sucking part of their company that they just kind of have to do to be the best, now companies are actually going to pay them and they're going to have the same benefit, right? You're going to have the same benefit whether BP does it or this new gas station does it or Tesla does it. It doesn't really matter. Now, of course, maybe there's something in there where if Tesla agrees to this and it's all like in one specific area, maybe it's not as widespread. So maybe it doesn't benefit as many Tesla users as if Tesla were to scientifically or mathematically put them everywhere they should be to scale out over time. Maybe there are going to be some areas that are neglected, but Tesla, the company, will probably try to weigh that out over time. They're still going to be building out their own, I'm sure, unless it comes out that like a couple more companies maybe are building these out over time, or putting them in different areas over time. But $100 million worth of Tesla chargers is massive. Like, I want to hear someone on a call go through like how much that would actually cost. I forget exactly how many they put out on the network every year, how much they grow. So I don't know if this is going to take the majority of the supply that they could build out right now, or if they're going to like only sell to these different companies, or if they're also going to be building it out themselves as well and kind of trying to balance that. But I would also be curious what the margin is like. Are they making 20% on these chargers? I would assume as they scale up, continue to scale up, it's going to be one of those things where, yeah, you could just have them every couple miles and no one would think twice about it, but you have gas stations in like just populated areas like every couple blocks. So it might be one of those things where more people want them, more gas stations want them. So they could have like an overabundance of Tesla superchargers. Maybe they have like one at every gas station or something, or a couple at every gas station at first. And then they just add an extra one, add an extra stall over time, as opposed to a gas station where that might be a lot more construction, something like that. So it just blows my mind, all the possibilities and all the questions I have about this. And I think this is going to be a very expensive company down the line. Like, it's going to be hard to get your hands on just a few shares of Tesla down the line because of how the company is changing right now. Like, the mechanics are changing. How the company works and how it's growing is impressive. As you can see here, the annual revenue, let me just get this out of the way, continues to spike up year after year, growing significantly. Cash flows also continuing to spike up. Now, recently, we've had a tough year. Like, the cash flows for this company this year are probably not going to be as impressive as last year. However, that's because it's really hard to sell cars right now. The margins have to go down because the cost of buying a car on a loan is going up. And at the same time, even though cash flows are down a little bit this year, the cash position continues to go up. The debt continues to go down. Shares are just barely moving up, which means, and they've already said this, that if they can, they'll start buying back shares. Now, I think there are probably other ways to spend money, but they're spending a lot of money anyways on robotics, on FSD. Like, they're throwing a lot of cash at it to try to continue to grow and continue to get better at it. So what do you think they do after they have nowhere else to put their cash, which they've been building cash? Like, the last quarter, they stacked up $3 billion worth of cash. Well, after they get enough in their war chest, they're going to buy back shares. And Elon Musk has said it that he's probably a little bit too cautious because he went through 2008 and he doesn't want to be caught going bankrupt when they're such a huge company. And it's basically like his way to bankroll a lot of other projects that he wants to have, like Twitter or like SpaceX, that kind of thing. And now a lot of those other companies are profitable or close to profitable. So that might play a role in it too, is that he's not as worried about Tesla because it's not going to it's not going to help him pay for everything else, bankroll all his other companies. They're going to start buying back shares. And that's one of the cool things. When a company starts doing that, like Apple, they continuously buy back shares. When the price falls down and it continues to fall down, they can support the price by buying back their own shares. They can be the buyer for all the sellers in the market. Like, how much do you think Apple buys back each quarter? It's a significant amount. Right here, you can see 15.78 billion shares to 15.67. So they're buying, what is that, 110 million shares? And that's after any kind of dilution or anything like that. They're buying back 111 million, if I have that right, 111 million or 110 million shares that cost $200 each. They're buying back tens of billions of dollars of shares each year. So if the price falls down, that's fine. They're just buying back shares at a cheaper price, which supports the price even more. And then they get more cash flow per share. They get more EPS per share, and they can buy even more shares. They can continue to buy people out over time, and that supports the price. And that's something that's going to happen with Tesla. Tesla's still growing like a massive company, but the thing is, they're so profitable and they're in such a good position that they literally need somewhere to put their money. So they're going to buy back shares. So this is a really cool thing. And this, along with the massive areas that they can build into as a company, the massive businesses that they can create, is going to send the stock parabolic at some point, in my opinion. And keep in mind, they are still down significantly from where they were last year in terms of price, or the year before. Back in 2021, they were at $400. So remember that. It's been a wild ride for Tesla. We're still not even close to where we were in 2021. And even in 2020, right, we were at the same price, basically around the same time of the year, about $200 for the first time. And Tesla has changed massively since then. I mean, in 2020, the company did $31.5 billion worth of revenue. It does almost triple that now. It really, when you look this year, it probably will do triple. Just last year, it did 2.5 times. The EBITDA was $4.2 billion. 2 years later, 17.8. So it like quadrupled EBITDA in 2 years, and we're even higher than that now. Cash flow, the free cash flow went from 2.7 billion to 7.55 in 2 years. Net income went up 20x. Like, this company is completely different from where it was a couple of years ago. The balance sheet looks better. I mean, 2 years ago, they had $6.6 billion worth of debt and $19.4 billion worth of cash. So net, they were, 13 billion? Now they're twice that. They're at 26 billion as of the last quarter. Their expenses have gone up, but when you consider how much they're building, they have a lot more property. They have a lot more factories now, and they're building more. They're further along in all their businesses and their technology. And the price is the same. When you look at 2021, their company has changed a lot too. Let's look at whatever the last quarter was in 2021. So 930 in 2021 versus 930 here. This is when they were twice the price. When they were twice the price in terms of the stock price, they were doing $13.8 billion worth of revenue. Now they're at 23.4. Let's take a look here. They were at $1.3 billion in free cash flow. Now, of course, like I said, they're actually down on free cash flow. So I'm being objective here. They are down in terms of free cash flow because they're cutting into margins. But they've had a quarter that was almost 3 times the cash flow as well. Their EPS from that quarter has gone up. So even though their free cash flow is down, EPS is up. They've, again, paid down more debt. I mean, back in 2021, they were net like $13 billion in cash versus, again, being $26 billion now. So this company has completely changed. When the metrics change, or when the company changes from maybe a tough time here with low free cash flow to interest rates getting down a little bit lower, even if they're not down at 0% on a federal rate like they used to be, if they're down at 3 or 4%, people are more likely to buy Teslas, especially when they're not fearing recession or job loss. And when they go out and start making a lot more free cash flow and they start buying back shares, once the next part of their business grows, I mean, the thing's going to explode. I mean, we're already seeing a whole new business unit basically selling chargers for profit instead of having it come out of their own pocketbook. We've seen that in the last couple weeks. How many more things like that are going to happen over the coming years where we just get massive profitability from something that used to cost us money? That's nuts. So I didn't mean to get on a rant there, but everything's going to change with Tesla very soon. Like, it's already changing. This was a massive change over the last week. At the same time that they're building this out and they continue to get more and more good news, I'd say, we have things like this happen. Chrysler offers voluntary separation packages for half of U.S. white-collar employees to reduce headcount. They literally offer this to 6,400 employees of its 12,700 U.S. employees with 5 or more years of experience. I mean, they're basically saying, hey, we want to cut half our staff. Now, I think that they realize that not everyone will take these packages, but imagine your company all of a sudden says, hey, half of you guys can just leave. We don't care. We'll pay you to leave. I wouldn't feel too good if I was in that position. Now, Someone says job security is 10 times more important than getting a 10% raise right now. These people who are striking have no clue what's coming. I'd say that's very much the case. I said that the whole time when UAW was striking. This could be really bad. I mean, they're offering these packages probably because they can't fire all these people right away, but they want to start leaning down. It's a better look as well if they pay these people out. There are maybe less lawsuits or something. But this is the white collar jobs, so they don't have the same protections as the UAW workers. But the thing is, if they're doing this, if they're offering this to people, do you think it's out of the kindness of their heart? No. There's a reason for it. And if they're trying to get rid of this many employees, don't you think they're going to try to figure out every cost-cutting way of limiting the amount of new employees that are coming in and also firing or kicking out the old employees? I think that's the case. So they're going to continue to reduce headcount to try to become more efficient. And I think that's the case at all of the major companies, at least the big three. And now it's coming out that the Ford production workers in Kentucky vote against UAW deal. So there are multiple plants now that are trying to vote against this UAW deal. Now, I'm not sure exactly why this is, but a lot of them are trying to get this thing to not go through. I don't know all the logistics of whether they can actually stop it, but this is a problem. This is a problem for the big three. I'm sure that they're crapping their pants. And at the same time, we have so much promotion for like the new Cybertruck. And I realize that this isn't going to be the largest revenue driver for Tesla over the next couple of years, at least at maybe the first year or two. But still, I mean, the amount of eyes on the Cybertruck is massive, at least on Twitter right now. And I think it's becoming bigger and bigger outside of Twitter. The thing is, there are a lot of people that don't look at Twitter. I mean, most people don't. There are a lot of people that don't look at the news either. So it's really going to take the Cybertruck to actually hit the roads for people to see it and understand it. Like, if I asked my in-laws or if I asked my family to sketch out a Cybertruck for me, they wouldn't be able to like even show probably the design. A lot of the people in my family, of course, there are a couple exceptions, but a lot of people just don't understand what it looks like or understand what it does even more. Like they might just hear a snippet about how weird it looks and then say, oh yeah, that looks weird, but not understand how crazy it actually is. Joe Rogan can shoot a huge arrow at it and it just bounces right off of it. You can shoot a Tommy gun in it. Like people are going to play with this thing and it's going to get so many eyes. I mean, this is the Prime Minister of Thailand just taking a look at it, standing on it, stuff like that. Like that's cool. That's cool publicity for them. Now, I will say Tesla is also cheap. Like when I talk to my family members about it, a lot of them don't understand how cheap the cars are getting. Now, I'm not saying that they're like buying a Toyota Camry, but they are. When you look at the cost ownership over time, a lot of people just don't understand that they're much cheaper over time. Like I've had a couple things come up on my Tesla. I've actually popped a tire 3 times on it for some reason. I have the low profile tire. So the next car I'm getting is not going to be performance, I don't think, the performance edition. But the Model Y, when you look at it, is cheaper than most, or it's about the same price as most crossovers. This is what we're looking at for our next car. Like when we want to have kids, you better believe I'm looking at this. The long range after probable savings is under 40 grand. Now, before it's still only 49 and you'd get $7,500 off for the tax credit. So you're looking at like 41,500, which isn't bad for a new car with these specs. I mean, it's a fun car too. It's going to last a long time in my opinion. So I like Tesla a lot, don't get me wrong, but also I would buy this thing probably if it wasn't a Tesla. Like if there's some other EV that had all these specs and it was this price and Tesla was a little bit more expensive, I'd probably buy this other EV. But it just happens to be that Tesla has the best product out there at the best price. So if you want one of these, again, I have a referral credit underneath the video. It gives us both some free supercharging or free FSD, which will be cool. And let me know your thoughts on all this underneath the video. Let me know if you like Tesla as a company, if you've ever driven a Tesla. I still run into people all the time that are big car guys that have never been in a Tesla. I just took people out for a test drive just the other day. Literally, we were up at our cottage, and it's so much fun. People are blown away every single time. To be in a car that's like the Model 3 performance, that's a $45,000 or $50,000 car that's 0 to 60 in 3 seconds basically, is unbelievable. And the pickup speed on it is unbelievable. Like, people just can't comprehend it. It's like being in a $150,000 car, but it's a third the price. And it's better for the environment. It's got better tech, all that. Now, I'm going to say something like buy 5 shares of this company in the title. And usually I'd go through exactly why I come out to that number. But honestly, it's going to be different for everyone. The reason I say that is because for most investors, if you have, a $10,000 to $50,000 portfolio, that gives you some exposure. Now, of course, depending on your risk tolerance, you're going to want more or less. Depending on your portfolio size, you're going to want more or less. But you, in my opinion, want some exposure to this company because it is a life-changing company. It's literally changing the world as we know it, transitioning us to clean EVs. And the reason some people don't like it is just because of Elon Musk's personality. I mean, no one talks about Jeff Bezos' personality or Mark Zuckerberg, really. And this is a car company that is, again, changing the world, making the world a better place, in my opinion. And what they're trying to do is going to explode in popularity. I think, like, the company itself, the product lines, how it actually improves people's lives, saves people time, gives them independence away from, away from the grid if they're in a place where they can't actually control what they do all the time because they're losing power, that kind of stuff. It's life-changing. And the metrics behind the company are massive too. So 5 shares, I say that it's going to depend on you, but 5 shares does give you some exposure. And I think this is a company that over the next 10 years, 15, 20 years, can 10x. I really do. I think it can be a $7 billion company or $7 trillion company. So 5 shares, if you have 5 shares right now and it grows 10x, you have $10,000. Is that going to change your life? Probably not for most people, but that can get you interested in Tesla, start paying attention to it, buy the dip, buy something like when it falls down 50%, like it did last year, 70%, whatever that was, and it fell down to $100. You might be able to get in at a good time, and that can be life-changing. Once you buy the stock, you'll pay attention more, you'll pay attention to what's happening in their quarterly reports, and it can change your life. Thank you so much for watching. I appreciate it. I probably talked your ear off enough about Tesla because I am a big Tesla fan. Now, let me know your thoughts. Thank you so much. I appreciate it. Hit subscribe for more videos like this, and let me know if you like videos like this. I approve every comment. If I don't heart it, I still see it because I'm approving every comment right now to get out the bots. Thank you. I'll see you in the next one. Bye.